All right, so let's take a look at the gold market. There's some really important technical developments going on. As you can see on this weekly chart, gold is now broken back above the 30-week moving average. And this is important because gold is basically in a stage 1 base now and, is on the lookout for potential new stage 2 bull market, which is where you can make, explosive gains when you get positioned early in a new stage 2. What's important technically on this chart is that gold is now above resistance at 1150 that was established in late 2014 and in the middle of this year, when we had this breakdown in the summer. And what's actually interesting on this chart as well is that um, gold is right below this $1,200 level, which was important support back in 2013 when really most of the gold bear market was completed. I've talked about this in past videos, but most of the gold bear market was from, late 2012 to mid 2013. Ever since then, there's been countless amounts of negative stuff written about gold, but in reality, the price action hasn't been that bearish. I mean, gold lost essentially $100 from this low all the way down to the recent low of this year. So most of the negativity in gold is completely kind of unfounded and just out there because gold really hasn't done anything bullish, but it really hasn't lost a lot of ground either. One other thing to note is that gold really never has, in 2014 and earlier this year, it did break above the 30-week moving average, but it never retested the 30-week and then held. So what we want to see is for gold to break above the 30-week moving average here, and then on the next pullback actually hold the 30-week moving average, and then launch into a new stage 2 advance. So you can see that on the next chart when they talk about the ideal buy point for a new stage 2 rally. The first buy point is really the breakout above the 30-week moving average. And the safer, but maybe a little bit higher buy point is actually the retest and then finding the 30-week as support, which validates the new stage 2 advance. Well, taking a look at silver, it's kind of in the same position as gold. We're seeing a break above the 30-week moving average. Kind of want to see the same thing, if it continues to break above, retest, and then launch into a new bull market. As you can see, all the failed tests of the 30-week from previous rallies, which show that these were just failed fake rallies that suckered people in on the long side. And we've had a lot of these over the years, so this is what's really put the negativity and bearishness into the gold market. Is every single rally for the last 2 years or so has failed. The action in the U.S. dollar is extremely important to gold and silver. As you can see, I did a video back in March talking about how this could be a parabolic top for the U.S. dollar, and that's kind of proven to be the case so far. The dollar ever since March has kind of traced this stage 3 top, and now it's actually breaking below the 30-week moving average for the first time, since mid 2014. So this is very bearish technical action for the dollar, and if this continues, it's really going to be supportive for the gold price. Taking a look at gold stocks, again, kind of in the same position right now as gold and silver, looking for a breakout above the 30-week. Important to note here, though, is that volume on GDX this week has been tremendous. It's already up above average volume at 240 million shares, and we're only through Wednesday of this week, so it's very possible that GDX is going to print potentially over 400 million shares in upside volume this week, which is very bullish considering where we're coming at off of this bottom. Also, is noteworthy that GDX had a huge week last week, and it's following it up this week with even more gains. So, the gains tend to come quickly when markets bottom and go back up to the upside. Next, GDXJ, kind of in the same spot as GDX. We're going to see above average volume again on GDXJ this week, and once GDXJ gets above the mid 20s, it's going to be in a much more bullish position on the chart. This is an important chart, gold compared to foreign currencies. I've talked about this in the past too, but we saw gold break out against foreign currencies in early 2015, and then kind of like a stage 2 test of the breakout, find support here, which was at this base that was built from mid 2013 until the end of 2014, and now we're starting to see gold break out against foreign currencies again, above the 30-week moving average. So that's a very bullish sign for gold, in that it's actually leading all currencies. And check out my screening tool at screener.nextbigtrade.com if you want to follow the stages for the different markets, and utilize this very simple trading system to navigate through the markets. But if I go down to the precious metals pages, I can see that 43% of precious metals ETFs in this group are now in a stage 1. If I look into this page, I see that GLD, SLV, and Palladium ETFs are now in stage 1, and we still have kind of stage 4 declines in the GDX, GDXJ, SIL, and Platinum. So really what we want to see is these ETFs continue to strengthen and move into a new stage 2, to really get prepared to kick off this upcoming potential bull market in the precious metals. If you look at precious metals miners, you can see that quite a few mining stocks have moved into stage 1 recently. You're looking at 10 or so stocks right here, and the total number of stocks in stage 1 is actually quite large now for the mining stocks. Also, we have some of the stronger miners are in stage 2. Particularly to note is Claude Resources is actually retesting the 30-week moving average in a in a bullish fashion, which means that it's probably going to be one of the leading mining stocks for this next bull move. I hope you like this video, and have a good night.